There is a reason why 99% of traders lose money trading and ultimately quit trading, and they think it's not for them or maybe it's a scam. But what if I tell you that there's only a small difference between a profitable trader and losing one? And the difference is that profitable trader was able to overcome these 6 mistakes that I'm going to share with you right now. And being completely honest, in my relatively short amount of trading experience, I made most of those mistakes. The first mistake is trading without an edge in the market. In this day and age, it is easy to get distracted by other people's opinions, and that's what social media does the best. It distracts you from where your attention actually has to be, especially for new traders, because they keep trying different trading patterns they see online and just praise that at least one of them gonna work. But that's not how trading works. You need to have an edge over the market. Your one strategy, your one pattern that you know inside out, it can be your edge. Because then you know how your strategy performs in every market conditions, and only then you have a clear map that you can follow to become a profitable trader. The second mistake that most traders do is they have a mindset that trading is a get-rich scheme. Can you get rich in trading? Yes. Can you get rich quick in trading? Yes, but the chances of that happening for you is the same as buying a lottery ticket. Trading is a compounding game. You compound your money, increase your positions, perfect your trading style, and only then down the road you start making those big gains daily. But it doesn't happen overnight. Trading is a double-edged sword. The same way you can become rich overnight, you can become broke overnight, but the latest have a higher likelihood of happening. So I'll give you a very smart advice. Instead of setting your daily or monthly goals, set them in a years. Instead of thinking you need to make 1,000 a day or 20-30,000 a month trading, set your goal to double your money in a year. That way you're not going to feel that you need to score big on your next trade, and that's ultimately gonna help you to succeed in a long term. The third mistake is trading without a stop loss. Your ego plays a big part in trading, and if you are overconfident in your abilities, then the market is gonna teach you a lesson. It always does. Most traders focus 100% on profits that they are going to make if their setup is correct. They rarely think about what's gonna happen if it goes the other way. They start taking big risks just to blow even bigger accounts. So you should always focus on the risk per trade to improve your execution and try to trade like a casino and not a gambler. Remember, house always wins. So if you are over leveraged on your trades, just know that market makers make big profit if they come after your liquidation and get you liquidated. Because as you might know, crypto markets are heavily manipulated. So trading without a stop loss is just giving market makers a green light to take your money. The fourth mistake is a fear of losing. Fear is the #1 trading killer, especially when you experience a big losing trade. And the fear comes because you are not in the control of your system and trading setups. You haven't tested your strategy for a long time enough to be confident in your trading plan. So the biggest favor you can do to yourself is to reduce position sizes until you get comfortable trading your setup, and then slowly increase your size. By doing that, you reduce anxiety of trading. You aren't emotionally attached to the profits or losses because your position size is small. So all you care about is your winning rate and perfection of your trading strategy. The next mistake is the one I made very often when I started trading, so it hits me on the personal level. So when I started, I thought the more time I invest into the trading, the better I'm gonna get at it. So I was spending anywhere from 6 to 8 hours a day on my phone or laptop looking at the charts, analyzing and entering tons of different trades, just to realize by the end of the day my brains were fried and I was still unprofitable. So the fifth mistake, and the one of the biggest, is overtrading. Have you ever thought about why pretty much all successful traders preach about trading for 1 to 2 hours at maximum a day? They just sit down before the market opens, look at the charts to see if there are any potential trades, and trade only if there are good opportunities. It's because the more you look at the charts and try to force something to happen instead of waiting waiting for the market to give you a trade, the more you get emotionally attached to your trades. And once you start trading out of emotions instead of logic, then you are on a straight line to lose money. So once you feel a need to open your charts for the 10th time in a day, you need to understand that you are emotionally attached to it, and the best thing is to close the charts and don't look at them until the next day. And the last mistake, and the most important, is not believing in yourself. Trading is the most disciplined business in the world. It involves self-doubt, pain, emotional fights, impatience, failures, greed, and laziness. It tends to bring all the negative emotions out of you because there is a thin line between trading and gambling. And as you know, gambling is exceptionally addictive. Even the best traders with decades of experience tend to make these mistakes from time to time. And once you do, you start doubting yourself, but you need to understand that it's a natural process of being a human. You are no less than any successful trader, and all it takes to succeed is consistency and self-discipline. If you learned something new from this video, make sure you subscribe, and if you want to learn more about trading and see my analysis of trades, make sure you join my Discord group. You can find the link down below in the description.